All right, so traditional loans for primary residence, they usually require you to save up about 3 to 5% for a down payment, and then another 3% in closing costs, somewhere around there. It's not so easy for everybody to do that. So after you get your conventional or FHA loan, whatever it may be, covering the majority of the purchase price, that loan's usually going to cover 95 to 97% of the amount, usually the max there. There's then two ways you go about getting a zero down loan to cover the rest. And this video assumes that you're not qualified for a VA or USDA loan, which are just straight up 0% down, assuming you meet those requirements. But the first way to do this is by getting a grant. A grant could cover most of the down payment. It could cover all of the down payment, or it could cover all of the down payment and then some more of the closing costs, depending on how the program is structured. That's the first way to do this. The second way is to get a second loan that's going to cover, just like we said before with the grant, it can cover most of the down payment, all the down payment, or all of the down payment and some of the closing costs. Okay, now, depending on the program, the second loan could come with no monthly payment. It could be required to be paid in 30 years or be paid back in 10 years. It could be forgivable after a certain time period. And then the interest rate on that second loan, it could be a zero interest second loan, or it could have the same interest rate as your first trust loan, or it could have an interest rate that's 2% higher than your first trust loan. These vary per program. Sometimes you even have different options on these in terms of what you can get within those state programs. Usually there's a specific loan program, a very popular one in each state, that's just going to be the dominant source of zero down loans. There's a few that I do in all my states, pretty much like one for each in Virginia, Maryland, DC, Texas, and North Carolina. Those are the states I'm licensed in right now. One thing about these is that even though they are zero down loans, there are higher than usual rates to compensate for the perceived risk to the lender or state agency that's giving these out or helping give these out, because you're leveraged more. You have a larger loan, and the returns aren't as fruitful to the ultimate lender back in that case. But now, before I move to my next part, guys, remember to go watch my first time buyer playlist if you haven't done so already. If you're new to this process, if you want to learn, that's going to teach you everything that I would want to know if I didn't know any of this stuff myself. And then you guys can call me, text me, email me anytime when you're ready to apply. Now, there's typical restrictions on these loans. There's income limits. These may be based on the borrower itself or both of the borrowers on the loan. They could be based on all the people that are going to be living in the house. It varies. Then there may or may not be a first-time buyer requirement on these. There's a max loan amount, usually a maximum purchase price. Those are usually decided county by county. You may or may not be able to use a cosigner on one of these loans. That's using usually mom or dad to help you out with qualifying for the payment. And then there's going to be higher rate and fee structures on these. And now sometimes there will be a option where you can take a higher rate or fee structure in order to skip some of these requirements. But one requirement that's like almost never skipped is the education course requirement. Usually there's an online course that you complete in several hours. Sometimes you have to meet in person with someone. Sometimes you have to have a one-on-one counseling call with someone from the state agency that's helping offer these out. But there's now actually, almost forgot about this one. There's actually then a third and final way you could get a zero down loan. That's really if you got a gift from someone, covered all the down payment and closing costs. That's possible, but then a lot of loans, they still have what's called a minimum required investment rule. It's basically saying, hey, they're saying you can't do that in those cases where you can't have someone pay for all of your down payment and closing costs. They want to have seen you saved up money over the years. And they usually want to see like 1 or 3% saved up on your end that you're bringing to the table. That's not part of the gift. But by the way, these zero down loans, they usually waive that minimum required investment rule, or just let the grant or the second loan compensate for that. But guys, that about wraps this up. I got several of these videos explaining some of these programs in depth. The most popular ones are up on my channel. You can take a look at those right now. I'll see you over there. Thank you.